Hey guys, Forex Class from BK Forex. Welcome to our Forex Daily Technicals from 11/8/13. As always, trading foreign exchange or margin carries a high level of risk and it may not be simple. I ask you to read this disclaimer very carefully to understand all the risks of your trading margin and seek advice from an independent financial advisor if you have any doubts. Well, what a day today. Really an unbelievable wide day. I almost don't even know where to start, but I think it's actually more interesting to start with the yen than it is with the euro, simply because we got the NFPs tomorrow, and the yen just did an unbelievable flame out both to the top side and to the bottom, just flushing all the basically all the stops at 99 and then flushing all the stops back down at 98. And now it creates a very unstable and sort of a technically very interesting, but I think trading wise, kind of a dangerous situation where either one of the edges of this range could possibly give us further directional moves. But having taken out the highs and then kind of ended closer to the lows, it is still clearly a very negative technical construct. And unless we have a super bullish NFP tomorrow that can carry us past today's highs, the bearish bias now is more in place than the bullish bias. And I think this is one of the more interesting things that we need to pay attention to as far as price action, where the price action was just so bearish today that even when we had to flip and turn ourselves back around from 99, had commented that even though they had stopped originally at around 98.50, that this kind of a turn was just so bearish that there was going to be further downside action, and indeed there was. There was at least almost 100 points more of downside action eventually that came through in this trade. In any case, for now, 98 is the consolidation level. We may just simply hold these levels until the NFPs tomorrow. But the bottom line is it's a very volatile structure with a bearish tilt. So again, unless the 99s get taken out and held, the path of least resistance to the downside now. 97 is the key support, of course, to the downside. And if that gets broken, let's say if we have a very negative weak number, then we really have potential here for a test of the swing lows here. Just a very, very interesting, but ultimately kind of a negative development in the price action that we need to pay attention to. Let's take a look at the, well, that's dollar Swiss. We don't care about dollar Swiss. Let's take a look at the euro, because the euro also had very interesting price action. So negative, we basically broke the lows as we talked about here. 34.50s key lows. We broke those. And then, of course, the ECB rate cut took us all the way down to 33s. We filled the gap, which is a very classic technical formation. Filled the gap, then just kind of bounced right back up. Now, as long as 33 does not get broken to the downside, this actually, as bad as it looks, is a more constructive positive setup. In other words, when you have such a big flush but then an end well above the lows, this is almost a hammer formation. And as long as the fact that we left this big wick on the charts suggests that there were buyers at 33 here that are worth holding. So can the euro rally back up to 35s? Quite possible. But this 35 is a very big overhead level now. And I think actually euro doesn't really get, euro basically is a bounce trade to the upside, but doesn't really get bullish until it clears the 35.50s. And to the downside, if we revisit back, and this is the key thing, these type of wicks are only valuable as long as they hold. Once you kind of break the wick to the downside, it actually becomes a very negative construct and pushes us all the way down to the 131 support level. So very much worth watching what the euro does here, but also not as volatile as the yen, but still a very, very volatile situation. What is a lot clearer, I think, if you're trading to the short side, is the Aussie, which has been bearish all day long, really couldn't muster any kind of a run to the upside. Yesterday's employment numbers were horrid. If we get a bad employment number out of the U.S., that is actually going to be very negative Aussie. And the reason why it'll be negative Aussie is because it's sort of negative risk appetite, negative global growth, and Aussie really is ultimately a global growth trade. And for that reason, I think any kind of a bounce in Aussie on anti-dollar flows really gets capped at around this 95, 25 level at most. But a negative move to the Aussie really takes place once we clear the 94.20s. So we're sort of these lows. 9400 is very, very stiff support here. You have 1, 2, 3, 4, 5 days of support here. So really need to break this sharply in order for us to kind of unwind further. After 94s, it really comes down to about 9300s as the key support level. And it's quite possible that we could reach there. In the meantime, 94 is the key level to the downside that I think the shorts are going to be eyeing. And last but not least, cable actually held up as always better than the rest. But here's the thing about cable that's might be a little bit troubling for the bulls. Still could not hold above the 6100s. We're kind of wicking out above 6100. Tomorrow, of course, could be a very different day. We get a negative US read, we might be able to pull ourselves up above 61, possibly even run it all the way out to 62. 62 is still very, very stiff resistance, and I think it's going to have a much harder time clearing there. But first and foremost, we got to come back and hold the 61s. If we can't, then it's sort of a lower high, and we can come back potentially to revisit the 59 support. Of all the fundamental pictures out there, cable has the strongest one. So the footprint here should be more positive than negative, but the technical price action is showing us a little bit of exhaustion here, so it's worth a caution here for us to view everything. Anyways, tomorrow could be just as wild as today was. We're certainly entering into a very, very precarious state here on the price action as far as the charts go, and it's very much worth watching everything very carefully. Wishing you guys the best of luck and the best of trading. Boris Schlossberg, BK Forex, over and out.